Welcome to the Ontario Mortgage and Real Estate Insights Podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today we're discussing how home prices have dropped the most in certain Ontario cities since 2022. This information comes from a recent report by real estate brokerage Zoocasa, which analyzed data from the Canadian Real Estate Association.
It's really been quite a shift, Steve. After years of skyrocketing prices, we're seeing a significant reset in the housing market, especially in Ontario and British Columbia, which have been some of the priciest regions.
Absolutely, Janine. These corrections are especially evident in urban centers where prices surged during the pandemic. Many homeowners are now selling at significant losses, particularly in the Greater Toronto area. For instance, a Mississauga property recently sold for a $445,000 loss, and an Oshawa home sold for a $510,000 loss just this past February.
That's tough to hear, Steve. It really highlights the financial pressure many families are under. Hamilton, for instance, saw the biggest price drop in Ontario, with average home prices falling from over $1.1 million in February 2022 to about $813,000 in 2025.
It's a considerable drop, Janine, and Kitchener-Waterloo wasn't far behind, with prices going from over $1 million down to around $786,000. The Niagara region also experienced significant declines, with prices now at about $672,000, down from $859,000 in 2022.
While these price drops are the focus, it's important to note that some areas did see slight increases at the start of 2025, like Kitchener-Waterloo, Sudbury, the GTA, and the Niagara region. It's a reminder that the market is always shifting.
That's true, Janine. However, the number of homes sold has declined sharply in many cities. The Greater Toronto area saw a 55.6% drop in sales, and Kitchener-Waterloo experienced a 58.5% decrease, which was the largest in Ontario.
And let's not forget about other areas like Ottawa, which saw a 51.7% decline, and Hamilton-Burlington, with a 50.9% drop in sales. These regions, with their high home prices, have been particularly sensitive to interest rate hikes.
Exactly, Janine. As Zoocasa pointed out, the high borrowing costs have led to increased monthly payments, causing buyer hesitation and leading to a freeze in sales. This has built up inventory and softened prices, showing a clear cause and effect relationship in these expensive markets. There's a lot on the economic watch list this week, Janine. We have key data on inflation, home sales, and consumer spending coming up just before the Bank of Canada's interest rate decision. Markets largely expect the central bank to hold its policy rate steady, but some economists are seeing enough downside pressure to justify a quarter-point rate cut.
That's right, Steve. The fresh inflation and housing data arriving early in the week could really tip the balance. It's a crucial time for the Bank of Canada to decide whether to maintain their cautious wait-and-see stance or take action.
On Tuesday, Statistics Canada will release March's Consumer Price Index. February's reading was 2.6%, which was just above expectations. Markets are hoping for a further slowdown, and any downside surprise could reinforce the case for rate cuts as early as June.
Absolutely, and the big question is whether the bank's preferred core measures show any sign of easing after nearly a year of persistent pressure. Meanwhile, the Canadian Real Estate Association will also release national home sales data for March on Tuesday. February saw a 10.4% year-over-year decline in sales, so it'll be interesting to see if there's been any change.
And let's not forget about housing starts, Janine. Economists expect a rise to 241,400 annualized units, up from 229,000 in February. That would mark the first monthly gain since December, potentially showing some resilience in the market.
Yes, and on Wednesday, the Bank of Canada is likely to hold its rate, but with a dovish lean. Scotiabank has called it a nervous hold, with strong cases on both sides. Persistent core inflation and rising business input costs are pushing for a hold, while signs of weakening growth, like falling commodity prices and job losses, are fueling expectations for a June cut.
The bank's monetary policy report and Governor Macklem's press conference will be closely watched for any shift in tone. It's a critical moment for mortgage professionals and market watchers to gauge whether inflation is cooling fast enough.
Exactly, Steve. And with federal leaders' debates scheduled this week, there's even more noise in the background. But by the end of the week, we should have a clearer picture of where the economy is heading.
In our final segment today, we're turning our focus to the Financial Services Regulatory Authority of Ontario's recent announcement regarding new continuing education requirements for mortgage agents and brokers. This move is designed to elevate the standards of professionalism in the industry, and it's certainly catching the attention of professionals across the province.
That's right, Steve. The FSRA's initiative introduces two key components: conduct continuing education and technical knowledge or professional development, also known as professional continuing education. These are crucial for ensuring that agents and brokers are not just keeping up with industry changes, but also enhancing their skills and knowledge.
Indeed, Janine. Mortgage agents and brokers are required to complete these new continuing education requirements by March 31st, 2026. To aid in the transition, the FSRA is organizing informational webinars. There's a live session scheduled for principal brokers on April 23, 2025, which will be led by Stephen Tysall and David Ha, who are senior managers at FSRA.
And for those who cannot make it, there will be another session on May 7th, 2025, specifically for all agents and brokers. Nicole Pace and David Ha will lead this session, providing detailed insights into how to meet the new continuing education requirements and what qualifies as professional continuing education.
It's a comprehensive effort by the FSRA to ensure that the mortgage brokering sector remains robust and well-regulated. They've highlighted the importance of these sessions for all stakeholders, including consumers, to ensure financial safety, fairness, and choice.
Absolutely, Steve. This initiative underscores the FSRA's commitment to elevating the professionalism within our industry, which ultimately benefits everyone involved, from the agents and brokers to the clients they serve.
And with that, let's wrap up today's episode. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder: Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time, and stay informed with the latest industry insights.